Hi guys, this is Pete from Mixcat. I hope you had a great weekend. I've seen in news reports that the economy is getting better, but I've seen lots of people that are in pretty bad shape. It's crazy to think that some might actually lose their houses due to some crazy interest rates or debt creeping up on them. If your interest rate is skyrocketed and you don't know what to do, I have some great information for you. I have a good friend Eddie from MDL Consulting who's a guru in loan modifications. I'm helping him put together a video series that'll teach you all the steps needed to drop your interest rates and your monthly payments. And without further ado, here's Eddie with MDL Consulting.
Welcome everyone to the wild world of loan modification. Today what we're going to do is we're going to go through some of the myths of loan modification and what reality really is. We'll start with one of the first questions that everybody asks. Can I do it myself? Yes, you can do a loan modification yourself. The problem is that many people do not know how to actually do a modification. So I'm going to teach you what the most important things are in getting approved on a modification, because starting a modification and getting approved are two totally different stories. If you're going to get approved on the HAMP program, which is the basically making home affordable, or the government, or the Obama program, whatever you want to call it, you do have to have certain criteria that you have to pass prior to getting approved. You also have to go through a trial period, and that trial period would be approximately 3 to 4 months. Two most important things on a loan modification are, we'll start off with your financials. Now, your financial statements are crucial to the loan modification. And one of the things you have to remember is, whoever tells you that you're going to save money off the principal, you'd have a better chance of Santa Claus dropping a brand new Corvette down your chimney. Okay? Do they take money off your principal? Yes. Some banks. For instance, if you're dealing with Wachovia, you might have a good chance of getting about 18% taken off your principal. If you're dealing with Oakland, you probably will get something off your principal, but it's going to depend on your circumstances. There's several different modifications out there. Be careful what you hear, and be careful of what you get. Please, if you don't know, I'm going to give you an introduction here, and I can help you out. Anyway, my name is Eddie Diaz. The name of my company is MDL Consulting. And that would be the letter M, the letter D as in David, L as in Larry Consulting. I'm located in Central Florida. My phone number here is 321-250-2223. And my email address would be loanmod4398@gmail.com. And that would be the word loan, L-O-A-N, mod, M-O-D, F-O-R, the number 398 at gmail.com. So if you want to get in contact with me, feel free to email me or give me a phone call. I'll be happy to help you through the process if you need it. We do perform what we call loan modification for portfolios for clients. We charge $398. We make sure that they're properly prepared. If you qualify, we make sure that they're prepared in a way that you're going to get approved. If you need our help throughout the process, our email and our phone lines will always be open to you. One of the most important things is, when you get your modification, never sign it without a professional reading it first. That is one of the things that we've been stating since the beginning of the process, because you don't know what you're signing. Do not go into a 40 or 50-year mortgage. Don't accept a forbearance. Again, there's a lot of terminology you may not know, but I do. And that is the problem with loan modification. If the bank is aware that you don't know what you're doing, they will take advantage of that. If they can get to you emotionally, they will take advantage of that. One of the reasons for hiring a third party is they have no emotional ties. They can't lie to me. Anyway, income and expense summary. I don't know how well you can see this, but I will zoom up in a little while. This is your expense summary. This is a very simple form. If you go to like Chase.com or any of the other bank lending institutions, they'll give you a complete financial statement, profit and loss statement, etc., etc. This is a simple one. Most lenders will take it, okay? And this is an income summary. Again, most lenders will take this. The only ones that won't take it is probably Chase, EMC Chase, Chase WAMU. They have their own form. That's what they like filled out. Give it to them. Don't fight them. Most banks are easy to deal with. One of the things that I tell clients all the time is to make sure that you deal with honey and not vinegar. You will get absolutely nowhere. Okay? The people that are actually trying to do these modifications for you are, a lot of them rookies. A lot of the rookies will get offended. You do not want to offend anybody because it's not their fault. They're just trying to help in most cases. And then if you get some of the old timers, they basically blame everybody but themselves, and they'll probably give you a hard time. There's a difference, and I'll just show you this way. Bank of America or Chase, whatever bank you want to name, okay? This hand has no idea what this hand is doing, and they have not even a ticket to the clue bus what the fingers are doing. So, you might have somebody working a modification with you and basically doing a great job, and all of a sudden you get this hand, which is the collection division, calling you up, telling you to pack up your clothes because you're going to be thrown out of your house. Collections usually works on a commission basis or is designed to work extremely harshly. They have no idea if you're working a modification. They have no idea if you're approved or not approved. They're just trying to collect money. They're usually rude and nasty. Hang up on them. On the other hand, if you get somebody that's working with you on the modification, again, more with honey than with vinegar. Be nice. You usually get niceness returned, and in return, you'll get niceness. The next most important thing that you need on your loan modification is a hardship. These are the two reasons you can be turned down for a modification. And these are standard on any of their websites. It's about 3 pages, but it's called a hardship letter. I suggest you fill it out by hand, nice and clearly. Take your time. Don't do computerized. Don't blame the economy. Nobody really cares. And trust me, nobody really cares. I care. They don't care. Do not say, don't go into any details other than what your real hardship is. Cut, dry, 5-10 lines, nothing more than that. Keep it simple, stupid. That's the way they say it. So, the simpler it is, the better it is. Did you lose your job? Yes, I lost my job. I was laid off for no reason. I used to work there for 10 years. The new corporations now are paying less. I can't find a job. I'm ill. Whatever it is, put it down there. Keep it to that subject. Don't talk about anything else. Do not do 2 or 3 pages on your computer. Just handwritten, simple, easy. Send it in. These 2 things are the most important parts of your modification. Income, expenses, hardship. Without a good hardship, you'll only get more hardship. So, you have to have a real hardship. Okay, do not bogus this up. You're going to know the truth. Okay? Your income, you can't lie about your income. You need to tell the truth. Okay? Now, I will give you a little information on this that you need to know. And double check and triple check before you make a decision. If you and your wife are on the loan, or you and your husband are on the loan, okay, so I don't get any complaints from either side of the sexes. One of you is actually on the loan and the other one is on the title. The one on the loan is the only one that has to prove income. The one on the title doesn't even have the authority to call the lender. Okay? They're not seen as a person on the loan. They won't be seen as a person, period. So, if you are 2 parties, both parties are literally on the loan. Now, when you get your mortgage statement, it says Joe Smith and Jane Smith on it. That means both of you are on the loan. But if you get one that says Joe Smith and Jane Smith says, I remember signing those papers, she probably signed the title. If you're a married couple, like I'm in the state of Florida, a married couple in the state of Florida, your wife has to know everything you buy. So she signs that she understands that you purchased a house and she puts herself on the title. So she becomes half owner of the title, not responsible for the loan. So in return, if she's not responsible for the loan, she should not be responsible for the payments. Okay? So when you're filling out your income, make sure that your income is basically shows the person on the loan, not the person on the mortgage. Okay? Or on the title. So if both of you are on the loan, okay, Mr. and Mrs. Smith are on the loan, then you put whoever the primary buyer is first, the co-buyer second, and you write down your income. Okay? You also have a little spot here where you can take out taxes or 401ks, etc., and you put gross and net. Now, here's how it works. If you're going to apply for the HAMP program, which is the Making Home Affordable, that's pretty much your best payment. You're going to qualify at 31% of your gross income. So, just so you don't waste your time, okay? If you are making $5,000, let me get my mini calculator here. All right, if you're making $5,000 combined income, this is gross before taxes or anything else, so times 31%, your new payment is $1,550. So, if your mortgage is under $1,550, and that includes your escrows, including taxes, insurance, and homeowner association, don't bother trying to do a modification. It ain't going to get any lower than that. Okay? So, you need to understand how it works, and basically the way it works is 31% of your gross income. They do not care if you got an $800 Toyota payment. That's your problem. Okay? Shouldn't have bought the damn Toyota in the first place. All right? So none of that matters to them. What matters to them is basically your gross income. Your other expenses need to be taken care of separately. If you need to go to a credit counselor, if you need to go to a debt modifier, which, by the way, everything can be modified. We do it all here. Okay? If you need to go to someone to actually manage your portfolio of income, then you need to see a professional to help you out on your other debt. When it comes to your mortgage, that's the way it works. Period. Okay? That's the lowest mortgage you're going to get. If they do internal modifications, you're about 34 to 38% of your gross income. Now, certain banks, like largest bank in America, ending with that, we never know which way they're going to go. They can go net or they can go gross. The calculation for the modification will go gross, but you never know if they're going to ask you for your net income and your gross income and how they're going to do the calculation. So you got to play that one by ear. Be quick and be fast when you're doing your math, okay? The way it's supposed to be done, if you go on to the Making Home Affordable website, you can calculate your new payment there by using their instructions. You can also see if you can get pre-approved by them. I suggest you do that. Go to the Making Home Affordable website. Put the information that they ask you for. It'll calculate your new monthly payment, also calculate if you can get approved or not. If you can, I suggest you fax that to the bank because it'll be a good head start for you. Now, income summary, hardship. These are the most important parts of your income summary. Your income cannot be less than your outgo. Okay, remember this. What you spend has to be less than your income. It's based on gross. Okay, so if you are spending $3,000 a month and you make $2,800, you are not going to get approved. Period. Now, on the other hand, if you're making $3,100 a month and your expenses are $3,000, you should get approved. So you just got to make sure you can balance yourself between the gross and the net. But your positive income will get you approved. Negative income, on the other hand, will not. Too much positive income will not. With the biggest bank in America, again, if you have too much in savings, you won't get approved. Just so you know. Or you're too much positive income, you won't get approved. So you have to be real careful with your income. Some income can be manipulated, some can't. Okay? If you are paying $600 in credit card bills, this reports to the credit bureau. You cannot hide that. The lender's going to see it. If you got that $800 a month Toyota Sienna payment, you can't hide it. They're going to see it. If you just co-sign your 18-year-old spoiled son's brand new 300 BMW and you're paying $600 a month for that, you're responsible for the whole $600 a month. You may not qualify. If you got $1,200 in car payments and $900 in a mortgage, you may not qualify. You want to basically understand that your other expenses cannot exceed your mortgage payment. And if you have to give one up, it's more important to give up the others than your mortgage, the house over your head. This is the way some of the lenders see it. Some lenders don't care. Biggest bank in America does care. Okay? They also, and here this is a myth, okay? And everybody in America should understand that this is the biggest myth out there for loan modifications. I was told that I have to stop making my payments. Not true. If you can afford to make your payments, make them. Sometimes it slows down the process a little bit of the loan modification. They'll hold back on you. Sometimes it actually helps expedite the modification process and make it a little bit faster. I tell everyone, if you're making your payments, if I take your case, continue making your payments. If you are not making your payments, however, don't start making a payment, I don't care what they tell you, until you get the approval or the trial period payment. And the reason for that is, if you start making changes in between, then the changes are going to cause changes in your modification process. You're not paying, don't pay. Don't all of a sudden say, well, they told me to make a payment of $300 so that I can be reviewed. Bull crap. That's collections. They don't care. They don't care if you lose your house. To them, it doesn't matter. If you are not making a payment, don't make the payment. Okay? If you are making your payments on time, don't stop making your payment. It's going to look like the modification company is doing something crooked. It's going to make you look like you're doing something crooked. You stay making that monthly payment. Okay? Something happens in between that's a real hardship. You have a heart attack. You can't die while we're in the middle of the process. I understand. But do it the right way. Okay? You deal right on your side. Usually the right things will happen in return. But that is the way, that is a big myth, that I have to stop making my payments in order to get the modification approved. Do not expect the modification to be done overnight. 120 days is about the average. Okay? Biggest bank in America, double that. If you're making your payments, probably double that. Okay? Some lenders work really, really quick, and I got to compliment some of the good lenders. I will compliment SunTrust, probably one of the best banks to deal with. Wells Fargo, hot and cold, but I would also rate them a really good bank to deal with. Some of the modification help that you get out there really does care and really does try to help you. Again, there are a few banks out there that are out there to help you if you're dealing with Wachovia. Now, they did get bought out, okay? But if you're dealing with Wachovia, they will do a financial verbally with you over the phone. Be prepared, okay? Do not go in there with nothing in your hands. Make sure you know what you're talking about. And remember the rules, positive income, okay? Once you do that interview with them over the phone, which is about a 1-hour interview, you usually get approved right on the spot. They'll take 18% off your principal. They will, however, offer you a 40-year mortgage and a little higher interest rate. If you got a $200,000 loan, back to my trusted calculator here, whichever way it works, $200,000 times 18% is $36,000 they're going to take off your principal. You don't say no to 36 grand. Okay? I'll tell you the way to get around it. I don't recommend anybody do a 40-year mortgage, but at the same time, I don't recommend anybody to say no to 36 grand. So if they drop a couple of points off your mortgage and take 36 grand, I want you to do all the math. How much are you saving for those 2 points in the balance of the term of your loan and the 36 grand into consideration? Then you take and you say, all right, my new mortgage is going to be $1,000 a month. Take and add $100, $150 to it. They just dropped it, $500, $600, $700. Add a little bit to it every month. You'll pay off that loan in 15 years. Doesn't matter if it's 40 years. You'll pay them off. You'll ruin their strategy. Okay? The way it works, the reason why they do the extra, they put the 40 years is because they take 36 grand off. They charge you an additional 155,000 in interest. To them, it's a wash. It works out good. So, it doesn't really matter as far as them losing any money. They're not going to lose anything. Another myth: the lender doesn't want to do my modification because the bank is bad. Blah blah blah. The lender just services your loan, and this is something that everyone should know out there. The lender services the loan. This is all they really do. And I'll give you an idea. I have Joe sitting here, and I got Bob here, and I'm the lender. Well, Joe is the mortgagee. He basically makes the payments on the house. Whichever bank you want to name me, ABC Bank, and Bob is the investor. So Joe pays me. I do the transaction. I get my cut based on the percentage of the mortgage, and then I pay Bob his cut. So, final decision goes to Bob. Most of the time, Bob is Freddie Mac, Fannie Mae. They'll approve your modification. The bank resists because the minute that they get less money, they get less commission times millions. Okay? So, this is why the bank makes it hard on you. Okay? They also think everybody out there is a crook, but if the CEOs looked in the mirror, they wouldn't feel that they'd feel right at home with everybody else. Put it that way. Remember that there's a lot of modification companies out there. Not all of them are bad. As a matter of fact, if we took most of the modification companies that are out there and we did the math, 300 million people in the United States, you probably have about 1,000 bad ones, okay, that'll try to rob you. You have a lot of good ones out there. You have a lot of good modification companies out there. Now, I won't tell you how many cases I win, but I can tell you that I could probably count them off of one hand how many I've lost, and my percentage for failure is about 3 to 5%. Usually because the client did something wrong, gave me false information, the math was done wrong. Most of the time, I win a case. And the reason for that is because of persistence will always beat resistance. And if you're not going to be persistent, do not attempt to do a modification on your own. If you're going to give up, if you're not going to put up with all the phone calls and you're not going to put up with all the collection agencies, and if you're going to cry every time they threaten you and tell you to move out of your house, don't bother with it. Find a company that's reputable, preferably through a friend that recommends them because they did something for them, okay? And go with the company because you will get help if it's a reputable company that comes through a referral, okay? If you try to do this on your own, yes, you can. And I can tell you, I had hair like Samson about a year ago when I started the modification process. Right now, look at me. So this is what's going to happen to you. We're going to take a brief pause, and we'll get back to you later. Okay?